Hi, I'm Paul Morton with M Advisor. Today we're talking about backdoor Roth contributions. Why would you use a backdoor Roth contribution? If you make too much money to fund a Roth IRA traditionally, then you will need to use another method or another way to fund a Roth IRA. So let's take a look. For 2024, the income limits for determining your eligibility to fund a Roth IRA is determined by your filing status, your tax filing status. So if you file single and you make less than $146,000, you can just go fund a Roth IRA. If you make between $146,000 and $161,000, then you can partially fund a Roth IRA. And if you make above $161,000, then you cannot fund a Roth IRA. Married filing jointly, if you make below $230,000, you cannot fund a Roth, or you can fund a Roth IRA. Between $230,000 and $240,000, you can partially fund a Roth IRA, and above $240,000 of income, if you're married filing jointly, you cannot fund a Roth IRA. Married filing separately, if you make greater than $10,000, you cannot fund a Roth IRA. That is a loophole that they wanted to make sure didn't open up, that a spouse would file married filing separately so they could fund a Roth IRA. So if you make above these income limits, then you will want to use a backdoor Roth IRA contribution strategy. Here's how it works. You open up a traditional IRA and you fund the traditional IRA and you keep it in cash. And then you convert those funds and transfer to a Roth IRA. If you do not deduct the funds in the traditional IRA, the original IRA, then there is no tax consequence on the conversion from the traditional IRA to the Roth IRA. And you were able to fund a Roth IRA as if you were to just open up a Roth IRA and fund it. You just had to go through the conduit of the Roth IRA conversion of that traditional IRA first. So here's a checklist, and here's some action steps on how to do this. Number one is determine your eligibility. We've covered some of this with the income limits, but there's also what's called the pro rata rule. So the IRS states that you cannot pick and choose which IRA you want to convert. You have to convert all of your IRAs on a pro rata basis, as a pro rata share. So here's an example. If I only wanted to convert IRA 2, and that has $5,000 in the account, and I wanted to convert all of that, but I also had another IRA with $10,000 in it, then I would have to convert some of both. I couldn't just pick IRA 2. So with a total of $15,000, $10,000 in IRA 1, $5,000 in IRA 2, I have a total of $15,000 in IRAs. So if I wanted to convert $5,000, 2/3 of that $5,000 would come from IRA 1, and 1/3 would come from IRA 2, a pro rata share of all of my IRAs. So in determining your eligibility, look and see if you have any simple IRAs, any SEP IRAs, rollover IRAs, or any other traditional IRAs out there that would limit you from converting funds from one IRA to a Roth IRA. 2, open up your accounts, your traditional IRA and your Roth IRA, and then you fund the traditional IRA and keep it in cash. You typically don't want the traditional IRA to grow. You want to keep it in cash. And then you can submit what's called a Roth IRA conversion form. And so this form will take your IRA and recategorize it and transfer it to your Roth IRA. And here's something that's important. Don't forget to invest the Roth IRA. The whole purpose of having the Roth IRA is to get good tax benefits on that account as you invest it and as that account grows. So don't forget to invest it to receive those tax benefits. And then lastly, with your tax return, file Form 8606 with that year's taxes. So if I did this in year 2024, then in April of 2025, when I'm filing 2024's taxes, I would file Form 8606. That tells the IRS that I made a contribution to an IRA and I am not taking a deduction for that contribution. Thank you for watching. I'm Paul Morton with M Advisor.